Good morning, traders.
Good morning.
Welcome to the last day of May. I hope everybody had a fruitful May up to now and can finish on a high today. So without further delay, let's move over to what's been happening. I also have big news for the people joining us today because we will have a special guest. In the second part of the show, our own Grega, master of the surfing of the Elliot Waves, is going to be with us. So don't stay with us, don't miss it. So what happened? I reckon the main news is that the EU leaders have agreed on a plan to cut the biggest part of the Russian oil imports, with a few exceptions, Hungary being the main one, which was sort of on the cards. What can we say about that? So they are planning to cut up to 90% of the oil imports towards the end of this year. There's still going to be some pipeline exceptions in the meantime. The stuff still has to be rubber stamped by the local governments, but looking at the resolvents of the EU leaders, I reckon that is a matter of time rather than if. What can we say about it? Well, it should weigh a little bit on euro, but over the longer term. So how is that going to be spread out? We don't really know. What we can say is that after the EU inflation data, which are absolutely skyrocketing, this is not going to help them come lower. So ECB's got a real job on hands. What do you say, Stelios, about that?
Yeah, 8.1%, the last print, up from 7.4. And as I said yesterday, what worries me is that the rate of change is not slowing. That's what worries me. So the ECB, I don't think they can really escape any longer. They have to do something. They have to follow the Fed's example, maybe do some 50s. I mean, I don't know. It's not that hiking that much is going to actually solve the problem, because all it's going to do is going to destroy demand. That's what it's going to do. So, we have a very weird type of inflation, which is not due to demand, but it's due to all sorts of other factors. And hiking like crazy is not really going to solve it. But the problem is that's the tool they have. Yeah. So they're going to have to do that. I think the euro will probably continue to appreciate simply on the back of central bank. I don't want to say divergence because they're all hiking, but I think the markets are going to catch up now with the ECB expectations and see what happens. But
do we think that they could surprise us and go straight away in June?
Yes, that would be a surprise. But you know what? With the way inflation is going and having a mandate for price stability, they kind of have to. That's a problem they have at the moment.
I was thinking when I saw the news and then I saw those inflation data. I'm as everybody knows by now, I'm not a huge fan of the euro yet. Well, not really against the dollar, and against other currencies might be a different thing. Because I think this Russian situation will weigh longer than what we think versus dollar, and the ECB will always be behind the Fed, but versus other currencies it may rise. But yesterday, the combination of this EU deal on Russian imports and the much higher than expected inflation, and it's not going to slow down, as you say, made me think, like, what if they already go in June, and what if the 50 BPs are really on the table? So there's something that we really have to monitor very, very closely, in my opinion, which could really make the euro start to move quite a bit versus currencies. Because so far, let's face it, okay, the dollar has moved, and then the euro has caught up a little bit, but versus crosses, it's been a big yo-yo, but we don't see the big advance of the euro yet. Could it be in store because ECB needs to raise a lot faster and bigger than what they are doing now? It is possible. but that's something that time will tell us. Okay, move over to a few data then. Let me see what else was in the news. Yeah, to come back quickly on this EU deal, we have seen oil shooting up overnight as well. That's not going to help the importing countries either, which may be a bit of a drag on the euro as well. And what we have seen as well is that it pulled yields higher. The euro yields have been leading the path, but then the dollar yields have been following as well. And one which really reacted straight away to that was the dollar yen. It's really glued to these US 10-year yields, and via the crosses, yen is suffering as well, because being a big energy importer, it one and all weighs on the yen. So be a bit careful with the yen in this scenario. Keep a close eye on those yields, because it's really glued to the yields when you trade yen. Moving over to
Cayman, just one thing to note about the sanctions on Russia and the oil ban. From what I was reading, it doesn't. It's a kind of a partial ban, right? It doesn't include pipelines. It's only for oil by sea, which, you know, it's strange. I think we can all agree that Europe needs it needs the energy from Russia. I mean, without that, it's going to be difficult, at least to transition from the current status quo to maybe some other kind of arrangement. So they're trying to show that they're doing something, but they're not doing it fully. And also, I don't know what the timing of this is. They said we're going to do this and that, but I haven't read details on timing. Is it going to be immediate? Is it going to be in 2 years?
They're planning to cut up to. We always have to put that in conditionally. They're planning to cut up to 90% of the imports by the end of the year.
Up to. Yeah.
Up to, but whether it be 50 or 60 or 90, we will see, right? Straight away, and on that, one of the beneficiaries, and we had the Norges Bank FX planned flows for June, which is a little. They are going to sell a little less Norwegian kroner per day. They are going to sell 1.5 billion Norwegian kroner per day, versus 2 billion up to now. And that combined with higher oil prices, higher energy prices, and the fact that Norway should be a beneficiary of this whole Russian situation. We saw the Norwegian kroner strengthen a bit again today. It's now back to 10.11 versus the euro. But I think it could put a small bit under the Norwegian kroner because at the same time, where Norges Bank is selling Norwegian kroner, we have to know that the exporting companies, they will have to buy Norwegian kroner to pay taxes on what they sell. Higher prices means higher taxes, so we could have like a nice counterbalance effect on what the Norges Bank is doing from the energy exporting Norwegian companies, right?
Yes. I like you all know I like the kroner, and I've been waiting for a dip in actually a spike in dollar Norway and euro Norway to sell it. I missed that 990 spike in dollar Norway. That was nice, but I think I agree with you. I think the forces are now kind of combining to drive the Norwegian kroner higher, so dollar Norway and euro Norway lower. Yeah, I would love to see another little spike to sell into, but we might not get it.
Yeah, the currency against which we played can vary depending on the people's opinion about dollars or euros or why not Swiss? If it's stable around this 102, 103 euro Swiss, you can do Noki Swiss, for instance. But then the Swiss franc is not really behaving very weak either. If energy continues to spike, well, one can imagine doing Noki yen as well, because the yen will continue to feel the heat from high energy prices. But next on what did we see overnight? Yeah, talking about Japan, IP was still weaker than expected. They are struggling for the time being, right? And then moving on to what other data. Let me show share the data screen, perhaps. Where is it? Here. Okay, I hope you can see it. So the data that came out overnight. Then we have this, the Chinese PMIs came out overnight as well. They were better than last time, but we're still below 50. So still no expansion, which is keeping, we saw dollar China come off quite a bit from those 670s spikes on China reopenings. The plan for Shanghai to reopen, Beijing in the slipstream, but it's stabilizing here until I think the numbers show us anything better than what we are having now. Moving on, what else did we have? We have, of course, the CPI. We had this the final GDP readings for France out this morning, which disappointed. It's another one that holds me back from really going very long euros somewhere, especially against the dollar still. The German employment data in line as expected, and then we spoke already about those big, the big European CPI data. So let's then quickly move over to what we're expecting for the day. One thing to keep in mind as we are the 31st is that we are still in full swing for the end of month flows. One interesting one to note is that, as I was saying yesterday, those are based on equity and bond moves. The equities are now, the S&P is virtually back to where the month started. So the flows that were expected to be buying dollars and then afterwards on the big swing back up, expected to be seller of dollars are now virtually flat. So it's an open question what's going to happen on the end of month flows really. So be a bit careful. In the European morning, we can see every hour fixings in sterling, for instance, in the euro, for instance, then into the noon hours. The ECB fixings will drag the euro around a little bit, and then come the 4 p.m. And I don't know if there's still much to do about the rebalancing in equities that the US accounts had to do, but keep a close eye on what's happening in the US stock markets today, because we can see some real wonky moves into the close there as well. So that's what's for the day, for the end of month, and then we will have the S&P composite there, and then but what's mainly on this afternoon is around 3 p.m. UK time, the consumer confidence in the US. We have been seeing that from the month of May, data tend to weaken, especially the difference from April into May has been noticeable, right? So we're going to have to be to pay attention to those data.
Sorry to interrupt, Jim. Just one thing I want to say: when you see prices going up, energy going up, yields going up, rent, mortgages going up, disposable income is going to be going lower. So confidence should be starting to retreat, basically. So we should be seeing lower and lower prints. It's only normal, and that usually precedes a nice little recession. But let's see if we get that.
And then is the question, because people have been trading both ways on those stock markets. I'm just taking the S&P as an example. We've seen weaker numbers in the US and in the S&P, of course, also due to end of month, but still going higher because the expectations that the Fed is going to slow down. But the old the old way of doing that, if numbers come in weaker and they continue to come in weaker, is that this rebalancing act of between Fed expectations and stock markets could come to a halt and really reverse, and that is lower yields, lower stock markets, right? If the market really feels that we are going into a recession.
Yes, indeed. Yeah,
So
this new normal is confusing a lot of people, because you know, it used to be exactly like you said, and now the question is, when do central banks come back in and provide all the liquidity needed, meaning they're buying everything, meaning everything goes higher, etc., etc.
Yeah, and the thing is, it's even confusing us, right? As people who have been in the market for a long time, because since the pandemic, I've been repeatedly saying that the whole world has accelerated. The economic cycles have dramatically accelerated. So we need to really be on our toes for changes which have a much faster impact as what we knew traditionally before the pandemic, before even the global financial crisis. It seems like these 10, 12 years have really put everything into an acceleration mill. So we need to pay close attention to what's happening on a day-to-day basis virtually. Okay, then this is going to be, I'm going to share what's this afternoon on the option expiries, because there's a few really big ones. And this is a bonus for the people listening in here, because we usually share this only for our subscribers. But as Ryan has already been talking about them before, I take the liberty of going quickly through them. We see there on the euro dollar 105.90 or figure. There's an absolute big one there. It's 8.5 billion euros. Where we are now, it's too far away. But watch out if ever anything happens on fixings, because just above there we have 106.2030, 1.7 billion. We have another 1.5 billion at 106.5, and we have not too far on the top side just over 1 billion, which is not a lot really in euro. For this afternoon, 3 p.m. London time. But watch out. One which, in my opinion, could be is much closer are those cable ones, the 125.5, 3.7 billion, and then one which is really close, 2.3 billion at 126.40. Keep an eye out on the clock. Watch what's happening around expiries. If one of those may attract, it may give a counter trade opportunity. It may tell us that particular pair is out of whack with what the rest is doing. So keep an eye on those options around 3 p.m. And really, for the last day of the month, again, I'm warning about wonky moves, which could take it up and down really quickly. But if Grega is around, Grega, are you around?
Yes, I'm here.
Okay, then. Well, then without any further delay, we are going to pass the hand to our master of the waves, the specialist of the Elliot counts. Grega, take it away. Stop my sharing and then you take over.
Yeah, sure.
And thanks for being with us.
Yeah, I love to share the charts, you know. So you can see my screen? Yes.
Yep, perfect.
Okay, perfectly. So I will firstly look at here the US Treasury notes. What I've been looking for, and we've been also talking about this with Dale in our regular face webinars, I was looking for a reversal from this, away from these October levels into this corrective wave 4 rally. So I think that this is something that has to do a lot with the US dollar. And what they see on the US dollar index is a very nice reversal from recent highs with 5 waves. So this structure suggests that we will continue to consolidate, potentially even higher here on these US notes. So if we look at the dollar index, and the most important charts, and the substructure that I see is here on the 4-hour chart. I can clearly count 5 waves down from the recent highs. And always when I see this 5-wave structure, well, it tells me that the market and the reversal that we are experiencing right now is a very strong. So this is an impulse which normally suggests that the mood is changing here, and potentially it should resume even lower after recovery. So I will be looking for some recovery here in the near future. I hope that we see 102.50, maybe even higher, but then eventually I will look for potential dollar shorts. Also, what we have seen recently is that commodity currencies actually found a low earlier before the stock market finally turned higher. So now when we have also the stock market turning around, I think that this risk-on environment is making even better conditions for commodity currencies to become much stronger. So before we go to the Aussie and Kiwi that I will share in a second, I want to look at the S&P 500. Now, if you recall, I've been looking for this complex corrective decline. I highlighted 1 week back or so, I highlighted these 2 equal lags measured from the highs. So we had this price equality here around 3,900. And more importantly, we also had this time equality of the same lags here coming right into this May 20 low. So it was a perfect reversal from there. And I've been also discussing with Blake back then that even if I'm just observing potential support, it doesn't mean that this support will actually hold. But it's much more important for me and potential trading ideas if I see the response away from that support. And so far we have seen a very nice bounce. More importantly, we have broken this trend line. So I think that there is a chance for more upside. Also, like Kemen mentioned earlier, we had, it looks like that we will be closing around similar levels like we opened back in May. So this can make a very nice candlestick formation here. Let me show this. So if we close here, I think that this could be a very nice indication that at least we could rally back towards these previous swings from April and March. So
Grega,
yeah,
is that kind of candle a bullish candle?
Yeah, definitely. Okay. I mean, if I see in the first part of the candle very bears that take action and are clearly progressing, but then bulls take over and will erase all of those bears in the second part of this candle, then clearly it means that bulls are not are now in force and probably will take price higher. So it's the same like on a daily basis. If I see during European session, let's say dollar moving sharply to the upside, okay, but then fully reverse during the US session and closes much lower, then obviously we know that this is now making a very important trend change, which could have or could continue the next or the following day. So I'm looking for the similar price action here on the monthly scale as well. Mm-hmm. So if we have this.
So when do we get like confirmations? Because we are now Tuesday the 31st, so we have another 3 days this week. We have like which is probably going to be very important labor report on Friday. To get confirmation about this, and we still don't know whether those rebalancings for the end of May are fully done or whether we see more. And we were looking at this 4,200 level. As a matter of fact, I went small short against the level, which is turning out to be a nice level. But I've already been scaling back on the way down because I'm not overly convinced. But in time-wise, when do you think that we see this pattern play out? Is it like, do we wait for those the labor report and then go take the direction? Or do you think that straight away from tomorrow we are in the seat and we're going for the ride?
Actually, what would be the most important for me to take action on this pattern is observing the price action on the hourly chart. Okay, so here, as you know, I want to see 5 waves up. So I said earlier with the dollar index, we had these 5 waves down. And now if we will see this 5 waves up sequence from that low, I think that currently we are in a minor wave 4. There is a very nice support when looking back here around 4,090. So I think that if we'll see even more upside by the end of the day and tomorrow, I think that buying pullbacks could be a very interesting scenario here. But what I want to say, or how I want to approach this, is we have this dollar index 5 waves down. We have the S&P 500 now finally turning around as well. So with that in mind, I want to focus on Aussie, on Kiwi. So firstly, if you look at Aussie here, big chart, very big head and shoulders pattern, potential supports now. Notice also very nice reversal candlestick formation as well here. But more importantly, if you look at this 4-hour chart, we came very nicely higher. It looks like an impulsive price action. So I think that more gains here could be coming. And also we have now finally all of the markets trying to show the same direction. So you have here in the middle copper that trying to stabilized. You have Chinese yuan also now trying to recover. You have gold that also bottoms, and we finally, after a delay, we have the S&P 500 turning up. So I think if, as I said, for the end of the month we stay here, then this would be confirmation, at least for my approach, that we are back in risk-on mode, even if just temporary. But even temporary moves could be enough to make money on the upside. So I will be watching these upcoming pullbacks on Aussie, also on Kiwi. Here is New Zealand dollar. You have this very nice 5 waves up. We are now at some resistance here when looking back at this from the start of May. So obviously there can be some pullbacks, and I hope we get one back to the former wave 4. There's a support at 0.640 area. So around there, I would be looking for potential buying opportunities, but after a free wave drop. So I'm watching.
Grega, a quick one back on the Aussie for our listeners and viewers is that next week, the 7th, we will have the RBA. So if those, and look at this picture, everybody, this is a perfect correlation pictures. If you want to trade currencies, you have to look at correlations as well if you want to trade them in the medium term. So this is an absolute great correlation chart for one thing. And thank you, Grega. And then don't forget we have RBA next week. If they go more hawkish than what they've been in the past, if they do maybe 40 or even 50 BPs possibly, this setup could become extremely impulsive, isn't it, Grega?
Yeah, and I think that Bank of New Zealand has the same view. Actually, they also turned hawkish recently, and they're looking for more hikes in the future. So I think that this is something that will be driving these commodity currencies higher. Also, after 1 or 2 more hikes from the Fed, we could clearly see these cycles turning around. So I think that there can be some major reversals going on Aussie and Kiwi as we move into the second part of this year. So that's why I'm saying that I will be watching for these pullbacks definitely on those pairs.
Also, I agree. The second part of the year could be very hot.
Yeah. Also, we have you mentioned earlier crude oil. I'm not sure how this will impact this ban. How it will impact the Eurozone. Obviously, it will cause more inflation. So maybe the ECB will decide to step up even faster on hikes. And this is something that good speculators maybe even look for the euro strength after pullbacks. However, when we're looking at crude oil, I think the dollar Mexican peso is something that we should look for as well. I think the dollar Mexican peso is headed even lower. Keep in mind that this is a very good pair for risk on, risk off moves to follow. So we have stocks turning higher. As long the recent lows on the S&P 500 will stay in place, I think that dollar Mexican peso is headed lower. And with the situation with these sanctions against Russia regarding crude oil, I think that this is the perfect scenario for dollar Mexican peso to see even more weakness. This is one of the pair that still hasn't seen a retracement, full retracement back to this February 2020 pandemic low. So this is something, yeah.
And also we cannot forget, if I may interrupt you just a second, that Mexican peso is now a real high yielder since the Banxico has been raising rates several times, even ahead of others. It's a real high yielder. I've seen a few things, and I've been doing it myself in a way to prevent from paying carry, also to be long MEX, and it's a really good carry now as well to have MEX in the whole setup of the market. Please proceed.
Yeah. So if anyone is watching this currency pair, then what I would be looking for here in the near future, while crude oil is trading higher, keep in mind that crude oil, I mean, it could even retest these levels back from 2008. I mean, if there were any better conditions than this for crude oil to retest these all-time highs, then this is definitely 2022, I believe. So in such scenario with crude oil seeing more upside with room for further gains, I think the dollar Mexican peso, as I said earlier, could see more weakness. So watch out this trend line. It could be a very nice retest for more weakness. I have here this lower time frame chart. So that's the same trend line where we have seen a breakout. So maybe we get this kiss, a retest of the trend line. You also have this former swing low right there. So that's the perfect resistance for more weakness. If we rally back above 20, then I think that we will continue to consolidate. But as it looks like right now, especially with crude oil, I think that this market could see more weakness after rally.
Yeah, and if we'd ever go back to around 20, there's massive resistances now building up in the 20 zone, right?
Yeah, exactly. So that's where we could be just chopping around, but definitely the higher degree trend, in my opinion, would still remain to the downside.
And also worth noting for our listeners is bear in mind it's still an emerging, considered as an emerging market currency. So moves of 1%, 2%, 3% are not to be ruled out. We can do them over sometimes over 1 day. So if we look at it now, we're trading around 1958. 20 is only 2% away. This is a move that can be done over a couple of sessions if one wants to be patient to have a look to see what's going on around 20. If I may, on these dollar MEX, Grega, I was looking at my chart, and if you go back to 2017 low over the 2020 low, and you just have one line there, we are on this comes in at around 40.45 on roughly, and we just stopped there.
You mean this one? This trend line, right?
Yeah, we just stopped on. We just stopped it.
Yeah, that's quite interesting. Yeah, I mean, definitely very important, important one. We should not ignore it.
I don't think we should ignore it indeed, and we stopped right on it. If you really go take the lows and lows and lows, we stopped right on it.
Yeah, I see
yesterday
that.
or the day before yesterday.
Yeah, great eye. Yeah, definitely have to watch this as well. But if crude oil will continue to rally, then I think that this one will give way here. Okay, so you have anything to add, Cayman?
Yeah, do you? Yeah, I was wondering if you see anything in your wave count or your analysis on sterling, for instance, because sterling is behaving a little bit bizarre, but in my opinion, it has difficulties to rally. Yeah. And I wonder if you see anything in your analysis which could give us a hint about further direction for sterling.
Well, I think that we have bottomed, but as you said, this recovery is definitely not that strong. Like, for example, on commodity pairs or even euro, I think euro pound is turning to the upside recently. So maybe Bank of England will not be that hawkish. I mean, we have a lot of other central banks that are acting more hawkish, and with the risk on flows, I think that pound Aussie for example, or pound Kiwi, could see much more weakness in this risk if we will see risk on environment. So I would be, in general, I would be very careful with pound. But since you mentioned from a technical perspective, I see a leading diagonal here from the lows, meaning that pair still could be bottoming. We are now in a consolidation phase after reaching this previous fourth wave. So it's a perfect resistance for this ABC drop. Now I would be looking for the first support at 124.65, but in leading diagonals, you will usually see that wave one is the strongest wave. So in such case, whenever we see a retracement, the upcoming pullback may not stop at the former wave 4, but rather at the wave 2 of this same degree. So 123.27 or 30 around there, it's, in my opinion, the most important support here. If we get this, then we could stop down there.
Yeah. I like when your analysis rejoins my amateuristic look at pictures, because I'm more, as people know by now, more of a fundamentalist trader. But I'm looking at beautiful pictures. But I learn every day from yours, and I must say that in cable, the 126.50.80, in my opinion, is a pretty decent resistance as well. Looking from my end, so. I'm glad that it coincides there with your views there.
Yeah, definitely. I'm looking for more weakness here.
Yeah. I couldn't agree more. To be honest, I'm trying to buy dips in euro sterling and sell rallies in the cable, which I did yesterday as well. I'm also always cautious because we are in the end of month, and as I've been repeating endlessly, we see wonky moves in the end of month. So be a bit careful out there. Grega, is there anything else you wanted to share with us?
No, actually, that's it.
Okay. Well, let me thank you very, very much. Even though having been in markets for nearly actually 40 years right now, I'm learning every day. When Grega comes on, it's an absolute great addition to what I already know, and I'm learning every day from you. So thanks very much, Grega, for that.
Thank you, Cameron. I'm also learning from you about fundamentals. You know that. I'm always on the watch for your commentary from Ryan and you.
But thanks. Thanks for flattering my ego. Okay, guys, let me just share the last screen then. Thank you very much, Grega. I hope you guys can see it again. I'm on the main page of our website. So the flow show is done for today. The US is back online today, so join us for the face experience a little bit later, and then we have a few more shows for ForexAnalytix subscribers later on. So the only thing that rests me to say is to thank you for your presence as usual. Be safe out there when you're surfing the waves or when you're surfing the end of month. We can have like funny moves out there, but at the same time, they are possible opportunities. So what I'm always saying is that don't put all your eggs in the same basket. Always make sure that your account has the possibility to do the next trade. Don't go all in on one trade, please, and stay alive. And thank you very much for listening. And well, we see and hear each other tomorrow again. Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.